Oh my god. I'm muted. All right. I'm here now. Good morning, everybody. Happy Halloween. Welcome to the members only Halloween party. Let's get weird. Is that Pickle Rick glasses? It is. I went to a party yesterday. I'm super hungover. You're not the only one. Today I'm dressed as a mentally healthy person. Stocks don't go up today. Can we trade shit coins? I guess. If you really want to. Guys, I've lost hundreds of dollars on my SHIB investment of $5. Look at the ETF dates. I see that May and August were the third Friday of the month. T+2. February appears to be T+3 from the third Friday. Is this because of AP or because of President's Day? It's probably because of President's Day. Was there 25, 24, 23? No. February 23rd, 24th. No, not because of President's Day. President's Day shouldn't affect anything. If it falls in the T plus window, like a holiday, then it should have an effect. But if it doesn't fall within the window, then it's irrelevant. So T+2 and 3 are trading days, right? Hold on. Where the fuck is Epic Pen? Working. See that? Oh. All right. There we go. So T+2 and T+3, these are trading days. T+35 is calendar days. So if you have a holiday during one of these periods, it'll push it out a day. The only time a holiday matters for T+35 is if it falls on the last day of the cycle, on the 35th day. In which case, it will then be pushed out to the morning of the 36th day. I actually don't think any of these cycles have ended on a holiday. How about a Tuesday? February was a Wednesday. When was President's Day, though? Like, I don't know what day that falls on. Was it on the 19th? Happy Halloween, like K. It's going great, Bradstock. I spent all day yesterday shopping for appliances. That was fun. Montana Grain Growers Association. What does that mean, Anthony the Dad? Are we going long grain? No, EMAs won't likely play a role in MOS. I just use them to find likely points of floating resistance. But Wednesday fall under 2+3 AP obligation. Yes. President's Day was 215. Yeah, that shouldn't have an effect. So we run 23rd, 24th of November. That's what I expected to happen, yeah. Likely we're gonna fail this upper test and fall through or fall down. We could potentially break through and trade the this like slightly lower trend that's starting to form, but I really don't care either way, right? I feel like this is unlikely. Also, didn't Cohen fire the COO on Friday, so I'm sure we'll tank Monday. I'm leasing, but I have a washer and dryer hookup, which I'm very excited about. Are you using the fan thingy from the technical analysis book? No, I'm not. Those are just previous long-term trends that we fell out the bottom of. And then the next one's a likely long-term trend that we could find support at. Thoughts on the CEO departing and the dip in after hours? I mean, not good. Right. Like, booting your COO months after you hire them is generally frowned upon. Unless they suck, but then you have to find a replacement of equally high merit, which can be hard on short notice. I haven't been this excited for downwards price action ever. I'm not in the new apartment. I'm still in the old one. It's going to take some time. Interesting. Thanks for letting me know, Matthew. Wasn't she old guard? I don't think so. I thought they brought on a COO pretty early this year. Oh, what were they? Oh, okay. Have they announced any intention of a replacement? Who's going to be taking on that extra burden? It's a pretty important job for an e-commerce company. Can you extend the life from 5 to 10 years to roughly 20 just based on soap detergent use? Interesting. What if you use like non-corrosive detergents? I don't know. See if the price continuing to trend upwards on 1124. Does that indicate they will roll futures? Yes. If we continue to see volume after 1124 into the roll date, which I believe is on 12/9. I believe it's out here. So if volume continues to and price action continues to pick up into the roll date, we can assume that they're rolling. And if they roll, it's likely the volume and price will drop off into the expiration date. Matt Kors dressed as the Chiquita banana lady. That sounds about right. Speculate on RC's tweet today. Montana Grain Growers Association squeezing grain. Interesting, Matthew. Fucking big appliance trying to screw us over. They want to hire Burry. That's fun. It says 350 again if they roll. Yeah, likely. Maybe higher. How do you say market? See the market playing out this week, considering the JPOW meeting on Wednesday. Maybe choppy. And then Wednesday will probably be likely dependent on what JPOW says. But I know everyone's freaking out about Evergrande. But Evergrande's losses still only amount to like $200 billion. It's not. I know everyone thinks it's a lot of money, but it's not. It's nominal. In the scheme of things, it's a very small sum. If they roll, will that adversely affect price action in January? Well, if they roll, I can kind of show you what that would probably look like. So if we go out here and we see them roll, right? That will likely dip the price. So they roll increasing volume and price action up into the roll date, right? Actually, probably way higher. So, and then after the roll into expiration and likely into this date here, we'll see declining price action, but then we have another spike here, right? From the ETF, the first batch of ETF leaps and GME December monthlies. After that, we'll probably see a downward price trend out to here, right? Because if they roll, they're not going to have FTDs. And then we'll see a spike here. So rolling is best case scenario for them, I think. But remember, if lots of people have options out here, right? It's going to be very hard for them to bring the price down because they'll continue to have to hedge these like February and later options. So especially if these are in the money. So if these go in the money over here in November, it's likely that those will create like hold on. So if those are in the money out there and people are just holding them and they have to continue to hedge, the price action will spike here and they'll probably just trade flat through those other windows, right? So by having all that leverage sitting there that they have to continuously hedge throughout this period, it prevents them from bringing the price down. Oh, wrong stream. Sorry. Stupid. Oh man. So if we have leverage out here, it's going to be really hard for them to bring the price down. So this is our roll date right here. It'll probably trade flat and then up and then flat again, right? And then up. Whereas if, there isn't a lot of options leverage out there, it's probably going to go like this. And no, I have no idea what the price points within that window will be. If you're buying weeklies for 23, 24, would you buy them Friday before, on Monday, or on the 23rd? I'm going to buy them on all three, Mike Nolan. I'm going to buy some on the 19th, some on Monday, some Tuesday morning. I'll probably buy the majority of them Monday. Depending, I mean, all of this is obviously dependent on any other catalyst not happening up until that point. Crane stop. Exactly. I tried pulling a Carl last night. It's not go well. It takes practice and experience. You have to be a pigeon whale. Did you see my message in the GG discussion this weekend about the bond market? I don't think I did, BJets. Just like tag me in it and I'll check it out. I might have, but I can't remember. I've seen thousands of things this weekend, unfortunately. How does liquidity work in options? Don't MMs just print more options as needed? Sort of, right? To an extent. Obviously, like, too many naked calls in either direction would create a lot of exposure. And it's really problematic for them on weeks where, like, there's not a significant amount of out of the money contracts. So if we look at weeks like November 12th, like, there's no the range on contracts is really low, which makes it hard for them to hedge volatility to the upside. And also the downside. She violated an NDAA or something about RC's plans. Maybe. Oh, the price is definitely going to go down because of the COO. Regardless of the reason for firing her. If she leaked something or broke her NDA, then that's like a security issue on GameStop's front. If she didn't, then it's just seen as like chaotic. So if you're playing shorter term options, then probably roll or sell. Don't forget to tag me, guys, if you have a question. Probably roll or sell, but if you have quarterlies, you can just hold. Yeah, I mean, I intend to hold my Februaries for the whole thing, right? And I will be rolling profits from the different run updates. Probably here if it rolls. If it doesn't, here and this through this window, and I'll be rolling those out to February as time progresses. Like a percentage of those profits will be rolled out to February. The rest will be maintained in order to play these possible price action dates. What are you dressed as? I don't know. I just put on some fucking Pickle Rick sunglasses. This is the best I could come up with on short notice. To be fair, I forgot today was Halloween until like minutes before the stream started. Yes, I had these sunglasses on hand. I'm happy you'll soon be without mold. Thanks, Luke's. Does retail holding holding options act as an insurance policy, or do you think it's crucial for January MOS? I think it's pretty fucking crucial. I mean, you know, Dow Dow said the market's a voting machine. And since everyone's such a big fan of elections, right? Imagine if you had 100 votes instead of one. I really do think that, in a way, MOAS is a self-fulfilling prophecy. And if the people want it, this is very likely a way to get it. Make great again. I've always been great, Carl. What's the date for the December run-up? So it should be the expiration of December monthlies, and then T+2, T+3. So it's likely the 21st or 22nd. Same as November, right? Except for leaps. So greater exposure. Probably much larger OI. You turn off the green screen for a few seconds so we can get some glorious sunglasses screen caps. Sure. I hope that helped. What was the date of the yellow vertical line next to the red line on 12/17? It's hard to read. This one? It's the 22nd. December 22nd. If we had a hard dip tomorrow because of COO news, would tomorrow be a good time to pick up options for Jan Feb, or wait until later in November? That depends on how hard of a dip it is, right? A South? I mean, if we drop below, the EMA 180, I might go a little ham. The pickler. Thanks, O there. Regarding options to the past runs to 350, is it really that retail made a difference to those runs by using the options chain, or was it big money using leveraged gamma ramp? Both. Definitely both. But A South, here's the thing, or I'm sorry, Bat Bones. Here's the thing about retail using options. We're the world's biggest fucking hedge fund. And when we're in a leveraged position. That's what January showed us, right? There wasn't a lot of institutional options interest in January run-up until the run-up, right? And unfortunately, most of the January run-up calls were weeklies, right? Because the stock was already running. And so there wasn't enough gamma exposure at the peak. To continue to push the price movement upwards, right? Because people were selling their options. If we go back and look, I believe 129 was a Friday, right? And that was our last peak. So on 129, And this will be in the DD later today. On 129, everyone sold. They no longer had that gamma exposure pressing against them, and the price immediately tanked. Right? But if the options had been out here in February, the price would have kept going up. It would have kept going up probably all the way into this next roll date, at which point the price would have spiked again, right? And that would have been it. That would have been margin calls and chaos and MOAS. There were 7,000 Corellas last night. It was definitely the hit costume of the year, other than Squid Games. Nice. I already told my wife I can't make any plans for January and February. She looks at me like I'm 5. Could this just be your new look on stream? I'll think about it. I might rock this tomorrow. I'm really enjoying not having the ring light blinding me right now, actually. I think it adds like a lot of credibility to the channel and doesn't make me look like a YouTuber at all. Wouldn't volatility spike if we drop that hard? They're short volatilities. They want it to drop. The price drops. I mean, volatility spiked. Volatility remained high all through these days, right? But they were able to get it under control right around here before it spiked again. Hence the puts, right? The puts are there. The massive number of puts that came in were to hedge volatility. As described in the SEC paper. Those out of the money puts, those way out of the money puts, those hedge volatility. That's the point of them. They're not married put calls, right? Because there's no married call on the other side of them. Which, you know, I guess was something we probably should have been looking for all along, but it seemed obvious enough, I guess. And, like, we can already see that they're prepped for January, right? With those out of the money puts that they bought whenever. I might go a little ham. Sells kidneys to raise money for Jimmy. You son of a bitch, I'm in. So exercise the options in January. Yeah, right? I mean, if people had done that, they would have been beyond fucked. But who could have known, right? There was no way to know that. Like, people were just playing the play that was available, which makes sense. I mean, as a matter of fact, the best part of all of this theory is kind of like Occam's razor. It works, right? Like, it makes sense. It's a logical conclusion. It's simple. And it explains basically everything. Just need to get your gaming chair. Will you allow someone who's not banned to put your DD on Wall Street bets? Yeah, that's fine. Tag it in the Discord and I'll let everyone know, I guess, so people can dude it or whatever. Buy for Feb, exercise in Jan. That seems like a strategy that would be very effective in squeezing the short positions. Yeah, I like it. Not a bad idea, Smoxbox. Do a dress up as a pigeon whale? That would have been amazing. How confident are you that retail uses their hedge fund prowess for options in January? I mean, I'm not, right? That's why I'm talking about it. Because I think people should be aware that this is an option. And even though like I do think DRS has a place and over time will have an effect, um I don't know if the pressure will be high enough at any other point throughout the rest of the year. June maybe. That's when there's more ETF leap expirations as well. I'll try to post. I haven't checked if I'm still banned or not. So I'll try to do that. It's not it's just cuz the background's black. Racist. See? Now it's orange. They're just see-through. Hatless Halloween costume. I did slick my hair back, but it didn't look good, so I put a hat on. So how do we destigmatize options on SS so people can leverage themselves? That old DD told them that gambling on zero DTs are bad, and they misunderstood it as all options are bad. I understand that, and I'm going to go about it the same way I've been going about it. I'm going to release the requisite information, and people can do with it what they want. Is the most bullish scenario that regular folks think there will be another run-up in January and a combo of FOMO buying shares and Wall Street bets degens loading up on options? Yeah, but they're going to load up on options for the wrong dates, right? That's the problem. It'd be the same problem again, as they're going to load up on those January options because that's where the liquidity is. But those are the wrong options. Those aren't the ones that apply the pressure, especially not if they sell when the price goes up and they near expiration before the actual peak of pressure, which is out on January 25th, right? God damn it, I moved another fucking line. I've really got to delete all this shit and do it again. So yeah, everyone's gonna have options out here on the 22nd, right? Was it the 22nd? Hold on, I gotta double check. I think it is 21st. So everyone's gonna have options here on the 21st. And if they fail to roll, you know, the price is gonna go up on that date. And then they're gonna sell, right? 1 and 0 DTEs. And then that's going to relieve the pressure going into this date where the ETF, where not only do they fail FTDs, this is also ETF leaps and January leaps exposure. So if you sell off the gamma ramp, right, then there's nothing to, God damn it. I did it again. If you sell off so the options will be here on the 21st. And if you sell off the gamma exposure, right, then there's no pressure to create a gamma squeeze. What about the June run and the March flash crash runs? Just trying to understand the cycles based on the options theory you're presenting. Okay, so I don't think the flash crash has a lot to do with it, right? They were just trying to bring the price down, and by doing that, they ended up creating more volatility, right? So they never tried to do that again. Not to the same extent. But also, sorry, this is wrong. I think these are not in the right dates. Yeah, some of these are off. So this was the roll date. Hold on, let me double check something. It's 311, 319. So is that correct? 311, 319. Okay, so they rolled here, right? And on 311, it was a 311 was a Thursday, right? And so we had another up day afterwards because this was Friday, right? As soon as those options were gone, straight down. So, you know, everyone had 312s because those were what was cheap. And as soon as that, so, but again, if people had had options out here, right, that pressure wouldn't have been relieved. I think, if anything, this kind of confirms what I'm talking about. Whereas if you look at June, right, 6-9. I mean, this was the share offering, so this may not be as relevant. 6-9 was a Wednesday. Yeah, so the share offering just killed the upward momentum. But this, like, had there not been a share offering, this definitely would have at least continued up into that Friday. And, you know, less volume and less interest here. Also, a lot of people sold with the share offering. There was some selling that occurred. You know, there was the ETF rebalancing as well. So lots of downward pressure in this whole cycle. Hatless Halloween costume. All right. My aunt finally stopped conversing with me. Now you can restart the stream, please, and thank you. What determines whether you elect to exercise versus sell your contracts? Depends on how in the money they are and how much confidence you have in the continued movement of the stock upwards after your expiration date. So, like, if a stock's just been moving up from, like, the time you bought the call till when you go to sell it, so you have, like, a longer term option, right? And you bought here for a strike that was here, and now the price is up here, right? You can exercise those, because, you know, your contract value is almost, it's worth significantly more than the underlying it represents, right? And additionally, like, if you expect the stock to continue up, you want to carry those 100 shares, right? So that's usually a reason that you would exercise an option. It happens rarely, right? Only a certain percentage of options get exercised. Generally, you'll see someone buy an option here when the price is here and the price goes through and they sell here, right? Capturing their profits. I thought the puts were to cover their shorts. Is married call needed to do that? Yeah. The idea was that they were using married put calls to hide FTDs, but I think they just used futures to hide short positions, right? But yeah, they do need a married. That's the whole. Also, I didn't never thought they would be using married put calls because it's like a well-known illegal thing, right? It's super obvious. It's on the FCC's radar. Like no one's just gonna do that shit right out in the open, right? If you start to remove the ideas of like large scale conspiracies and crime, you start to really see that like a lot of this shit can be affected with normal market mechanics. Like, yeah, they're in a shitty position. Turning off the buy button was definitely fucking illegal. But the rest of it, I mean, well within, the norm. If you're a hedge fund and this is what could happen, what is the counter move? I don't think there is one. There's too many different positions exposed at the same time that like even if you could counter one, you would ultimately end up screwed by the other, right? And retail holding leverage just presents yet another thing that they can't control. No one had any idea what was going on in January. The price was just going up. The reasons why were very unclear at the time. And it might have taken, a year to figure out a lot of it, but I think a lot of it's been figured out. Make sure to mention Tesla, otherwise Wall Street bets people won't YOLO. I have to get a birthday party. Can I get a birthday shout out for my son? Happy birthday, Dominic, son of the real Slim Pickle, one of the coolest guys on the stream. Also, happy Halloween. What a dope birthday. Just go over FTD day from Friday close. Was that info released? No, I don't think I have the FTD data yet. Probably Monday. Uh, Friday was not the 30th or the end of the month, and so I think the FTD data will come out Monday. So I'll go over it Monday. Can you make a background pixel Carl drinking wine? I'll think about it, Carl. I don't know how to do that, but it's been almost a year since I quit my job, a whole year of unemployment. Hopefully, it will be the rest of my life of unemployment. Just see what happens if I pick the first word for autofill on the way back from the airport. What? Can you make the background Pixel Carl drinking wine? Oh, I already answered that. Superstack is lost on DRS only. It hurts my head to read a lot of the comments there. It looks my dumpling. You know what? You know what it is? Is everyone wants a way to win this, and they think that DRS is that. I think it is in a way, but in a very long, grueling way. Um, and we all came here to get rich quick, so I think my idea is better. That's why he got rich without selling any shares. Yeah, no sell button for shares. Just get rich on options. Fuck it. I fixed the chart. Blood glasses are looking king. What are the thoughts about how much retail owns? Retail owns of Gmail. I'm surprised the DRS bot isn't as high as I would think. It doesn't matter. But I mean, I still think that like the survey data was pretty useful. I just think a lot of people aren't DRSing, but you know, that's going to be a thing, right? It makes sense that it was retail that caused the squeeze because the way that retail played options didn't allow enough time, thus relieving pressure and delaying MOAS to the next yearly cycle. Yeah. What would alter the January prediction in either a good or a bad way? No run-ups occur in November. The price continues to trend downwards. That would stink. But, you know, if your options are far enough out, it won't matter, right? Because you can just get out of them. What prevents the SEC from getting involved and to stop the stock or stop the buying? Probably nothing prevents them, right? I mean, I guess faith in the markets, but I mean, who gives a shit? Let's make it happen first, then we'll worry about the SEC and what they can do. So hold a bunch of call options that expire in February, exercise them when MOAS starts, and keep the shares as we go to the moon. Keep the options, then exercise as we go to the moon. Right? Because that just adds additional pressure to the squeeze. Like, the ideal situation is that everyone is holding options on this date. Because that applies the most gamma pressure, or gamma exposure to the short hedge funds. Because on this date, they have to cover GME leaps, ETF leaps, and their fucking massive amount of FTDs, right? And then that, like, with everyone holding shitloads of options out in February, that should be enough catalyst to push the price to where it needs to be to generate margin calls and force liquidation. Then exercise, you know, whenever, like after they get fucking margin called, keep pushing the price. It just keeps pushing the price up at that point. Diamond handed option plays. Never thought I'd think of that. It's similar. They want volatility to be flat, but I'll explain more on it later, Curtis. Can I get a shout out to my son? Head geese fucked. Geese fucked. Nice one, Hawkins. Uh, Shout out to Hedgies are fucked. Who's this? What's this fucking Bart Simpson? Who's this new Pi-Fi host? And what did you do with Gurk? I am Gurk. Don't question me. GameStop probably aware of the cycles at some level or another. Do you think earnings will look to leverage the potential upswing to announce their pad market response to release? I hope so. That'd be cool. Even more pressure, right? If they catalyze anything in that window that we're talking about, right? Like if they make an announcement in here, especially a big one, and this is a decent time frame to make an announcement. awesome, right? That's not bad for us. I mean, like, it may fuck up the cycle dates, but like these dates will still present pressure no matter what, right? And then, if we have additional FOMO, awesome. Big ups, right? I think I spent close to 1,000 the last month at GameStop buying Christmas gifts. Awesome. Yeah, they should have a good Q4, but yeah, we won't hear anything about that until February, right? March. Of course, big shout out to Han for her wine chug last night, her Halloween wine chug. Congrats, Han. I, if anything, one should admire Han's persistence in nailing the wine chug. She is not giving up. Pigeon whales don't give up. Feces for Moaz. When do one look for those options? I think the best times to buy those options are likely going to be before this date, right? Before the 24th. Possibly in this period and in this period. Depending on how the price action goes, you may have until here. So if they roll, right, then, this period, like, is going to just go up. So I expect downward price movement here, no matter what they do. I expect downward price movement here, and I expect downward price movement through this window here. And, obviously the current window, which is right here. But if at any point they try to, like, tank the stock and bring it below that EMA 180, so I think that's below 163 right now, that also presents an excellent opportunity to buy in. I am a degenerate now. Any pickles picks this week? Not yet. I don't know how the market's going to react to the Evergrande shit. It's looking risky this week. There's some stuff I have my eye on. There's a bunch of big earnings coming up this week, but I'll get to that later tonight. That's usually the last thing I dive into throughout today. It's Thanksgiving 1 p.m. market close the following day, the 26th, affect our ability to realize all potential upward movement. It could affect the ability to realize some of it. But, I mean, I think the majority of it's going to fall on those gamma exposure dates. So, no. It will likely make options for that week cheaper. So what strikes are you aiming for in February? Right now I have 300s for February and 350s. I may pick up some 4s, and I may pick up some, like, 250s as time progresses. If I profit massively off of this move and we see another dip below 200 in this window, I may pick up some 200s. And I'll probably fill some of that in as time progresses if I see opportunities for, like, low volatility. When will they start making more February calls available? Probably in December and January. They are monthlies, so they will fill in. But yeah, the February 18th is definitely a bit slim. There's also April. which is also a bit slim. There's June, which is not. June has strikes all the way up to 680. It doesn't really matter which of those further out dates you buy for, right? As long as it's past the expected price movement. Well, I'm going to be buying contracts in all the date ranges, right? Like that's my plan is I expect to ride this. I'm going to have options here for anything that occurs. So like at the midpoint, if I see volume decreasing, I'm going to get out of my Decembers, but I'm going to have December 17th, right, for quad witching. I'm then going to have Januaries to encapsulate this movement. I'm going to have Februaries to capture this movement. Shout out to my son, IP Freely. Do they have to roll those leaps, and can they FTD those? It's not an FTD. It's gamma exposure. They have to hedge or they go bankrupt. Titty titty bang bang. There is FTD exposure in this window as represented by the futures and FTD cycles, right? But that has nothing to do with the gamma exposure. And no, they haven't ever done that in the past. When those have stacked, we have run every time. Even in June, our only green day, like our only green period was right here where those June ETF leaps. So those the upward trend from those June ETF leaps was stronger than the share offering and the Russell 1000 rebalance. Which is significant, right? You shout out to my son, Banana Colon Cleanse. His middle name is Rick. Banana Colon Rick Cleanse. Thank you, Juseki. My dad is in the hospital. Can I get a shout out for? God damn it. Wood volatility, DD. Soon enough. Don't worry. We have time. Can you also update which pickles picks from last week are still valid? Like, you think me could be longer term? Yeah, I continue to stay bullish on me. It's consolidating, but it broke out above its previous trend. Obviously, I'm still in on cat. Like, nothing's changed there. It actually bounced up a little bit, I think, going into the end of the day Friday, right? It came back up. Yeah. So I'm still in on cat. Is there anything else that was longer term? I don't think so. Those are the big ones. Spotify might be coming back. It had a nice day Friday also. And if it stays low, this may be a longer term play. It really moves a lot slower than I expected it to. So this may be something worth playing, like that move back up above this resistance here at like 190. If it can move up, it's got a ton of range to the upside. The next resistance, at 312, which is significant, especially if you're in on options. Are CFDs an alternative to options? They're a bit different, but yeah. Leverage, right? Anything that generates or lets you leverage is an alternative to options, right? And in this regard, multi-blues. the key is leverage to more shares, and CFDs allow for that. So yeah, riskier and a little different in their execution, but your share average cost for those 100 shares is 300, correct? Yeah. When you exercise an options contract, you are buying a long call. You are buying the underlying for the strike. Right. So if you have a 300 strike, 300C, February 18th, 300C, and GameStop goes to $600, right? The value of this contract will be at least 30,000. It'll be more than that because of IV and other things, and that means that the call is worth the underlying, right? So you should be able to either sell it and buy 100 shares, or you can sell one to exercise another, or if you have cashless exercise at your broker, you can do that. You can exercise to close, I believe it is. There's a bunch of different terminology for it, but essentially your contract's worth more than the underlying strike value, which allows you to exercise for the shares that the contract represents. But it means that you're buying 100 shares at $300, which is 30,000 bucks. And yeah, that's the same is true for 150 or 350 or 250. It's all the same price relative to the strike. And that's what gives options value, is that you have the right to buy shares cheaper than the market price, or you have the right with a put to sell shares for more than the market price. Can you also update which Pickles picks from last week are still valid? Like, oh yeah, I did that. I was looking for some weeklies, and I was thinking about 3K on 195, 200, 210, 220. Is it better to spread it out like this, or less strikes, more contracts per strike? It's good to spread it out, but you generally want your the way I would do it is I would have a few at 195, and then more at 200, and then even more at like 210, and more at 220, right? Because like not only are these cheaper, but you can, if the price action accelerates through the whole thing, you have a significant number of contracts up here in the money, right? So increased leverage per strike is usually how it's done. So like I would have like 5, 10, 15, 20 contracts at those strikes, or 1, 2, 4, 8, or whatever multiple. It doesn't matter. So the same capital expenditure to strike, though, right? Be honest, is the only reason you're in me is because you're a self-professed narcissist? No? What's the highest strike you'd be buying into the January run up? I mean, I'm gonna buy something like way the fuck out of the money, right? Just for the IV. Especially if IV is low. If I can find an opportunity, I'll pick up some like whatever the furthest. I mean, I have 300s and 350s already. But I'll pick up 370s and whatever else opens up on this chain. I'd imagine that with the price action in November, that we'll see more contracts the following week pop up in the February chain, especially if the price stays up. So I'll be looking for an opportunity to buy like 6 or 8s out there as well. I won't be buying like 8 or 600s in January though. I know that's where they're available, but if I had to, I would go out to like June to buy those much higher strikes. You unlocked a different level of swag with the hat and glasses combo. Thanks, Mohadala. So you either have to have enough cash on hand to be able to afford the exercise, of the underlying value needs to be high enough to cover the cost of exercising. Is this right? Yes. That is correct. If you have multiple contracts, it makes the whole process a lot easier. Because you can sell one, exercise another. If MOAS happens, right, and we hit, $30,000 a share, and you're sitting on 300 strikes, you can just sell one share and exercise for 100, right? The benefit of having shares in the peaks over options is that you don't have to sell them in blocks of 100, right? You can sell 10 at a time or 20 at a time. Whereas if you have an option, you're going to have to sell the right to those 100 shares all at once. Can use the value. So yeah, in some instances you can use the value of the call itself. I believe it's called sell to exercise or exercise to close. There's a few different names for it. I'm not sure who has available yet. I was still waiting on someone to reach out to me with like a list of those. I may have to do some digging on my own if I get the time. Have you compared option strat paid live options flow data to your super secret live options data? I mean, my super secret one's free, right? But it's definitely not real time. It's close. It's like a 15-minute delay, which isn't bad for free. What brokers support cashless exercise? I'm not sure, yeah. Also, Pi-Fi is like 20 minutes behind in the chat. I'm really far behind. Would short hedge funds try to increase? Oh, no, I'm not. I'm like pretty caught up, actually. Would short hedge funds try to increase the volatility this week for 11/26 to make options more expensive to shake off some retail? It's possible. I mean, IV's kind of up a little bit from like the beginning of last week anyway. Because we had all that price improvement. But I'm sure if this COO shit hits the fan, the price will go down and there'll be plenty of opportunities. they're not going to not take advantage of negative news, right? Is there enough time for settlement if that happens? I guess we need to make sure the expiry is far enough away. Settlement's immediate on an options exercise. Do you believe in 7 or 8 figure share price? Yep. FI's Pickle Studio or even the plush is plush. There's a thread called Brokerage Research in the Country Club with some research that or thread. Okay. Awesome. Thank you for letting me know, Alex. I think TDA has sell to exercise. I'll review that and then I'll put that in the public posts because I want to make sure that everyone has access to that information. If you sell 1 share to exercise for 100 with unsettled funds, that may be a free ride violation. No, only if you then sell the 100 shares immediately before the funds settle. That's not a free ride violation. A free ride violation would be you exercise it without the cash on hand and then get the cash. But if one comes before the other, it's not a free ride violation. I might get a GFE. Possibly. Well, yeah, if you sell... Actually, no. I don't think you get a GFE for selling the exercised shares. What strike calls should I buy for the November run up? I was thinking 250, 275, maybe 300. I will not be buying anything. I mean, I'll be buying some that far out of the money, but the majority of my position is going to be closer to the money. Username, McUser face, McUsername face. Is it better by December, January, February options to capture the most violent upside? It's a good question. February options present the least risk, but also the least potential for gain, right? In November. For November, I'm gonna be, I'm buying further out positions, so I'm still playing weeklies. If I was broke and I couldn't like buy further dated options, I would be playing weeklies and then moving some of those profits into those safer positions after they went in the money. Is it possible to sell the exercise to get the stocks and immediately transfer the shares to another broker? You could, Tom. But, I mean, it's going to take a few days. And if we're in the middle of a short squeeze, it could take a lot of days. I don't know why you'd want to do that. Well, I guess I could see the reason, like, if you have those shares in a brokerage that you don't want to hold shares in. Yeah, you could. I mean, I think WeBull to Fidelity usually takes about T+3. IBKR is usually pretty quick too. I've never transferred from IBKR to Fidelity, or Vanguard, but it's usually pretty fast. You might have time. It's risky though. If you have a ladder of options, as you just described, how would you go about exiting them? Both in the case of being in the money for all of them or just some? For weeklies, I would be... So my February ones I intend to exercise, right? For my weeklies, I would just sell... Like, wherever I think the perceived peak of the price action is, I will sell my furthest out first, and as I've confirmed a decline in price, I will sell my lower strikes as and back out that way. So say I have like 300s, 250s, 225s, 210s, 200s, and 195s, right? And the price spikes to 225 and starts to come down. I'm going to sell these at the spike, right? Where their IV and like where their relative value is the highest. And then I will back out of these slowly as the price, settles or comes down. But yeah, always from the highest strike down. The more in the money the call, the safer the more protected it is from price movement to the downside. If you have a ladder, if you have multiple strike prices in the money, what order do you want to sell them in? Just what I described. And yeah, there's other options there too. Like I plan on rolling my weekly capital forward, right? But you could also, use that opportunity to sell like your 300s, 250s, 225s to exercise whatever strikes you have below that, right? So you could use that to exercise like a 195 or, if we drop even lower, a 185 or a 180. Considering port weeklies, I'm assuming your confidence is higher in the December run over the November run. No. I have a lot of confidence in the November run. The December run and the January run, like, we only have 1 point of evidence for, right? So that's, I would say, riskier in relation. It shouldn't be, right? Like, it should play out the exact same way. But yeah, I definitely have the most confidence in the November run. Yeah, I'm playing weeklies for all 3 runs. I will have weeklies. Can you give an outline of how to play weeklies effectively on GME? I mean, you probably want to buy them like the Friday or Monday of and be out of them by the spike, which should occur in that T+2, T+3 window, right? So if you're looking at like Friday, like if you're looking at the next week to be a ETF or a gamma exposure date, right? So this is like November, December, January. 24th, 22nd, and 25th. I will be playing weekly is probably like the Friday before or the Monday of the beginning of that week. So that same way that I described that I'll be entering November 24th, I'll enter all weeklies throughout the cycle. And then I'll be taking some of those profits and moving that out to February where I consider it to be safer. So say I put, 10,000 on weeklies in November and I go up, to 40K. This is, and then, I'll roll 20 of that out to February and put 30 into December. And then, say December goes up to, 120K. I'll roll 60 of that out to February and then put 60 into the January run up. Does that make sense? I mean, I'll wait for the spike and then set stop limits. That way, if it keeps going up, right, I can sell out if it dips. But if it keeps going up, I can set another stop limit higher. So I'll just follow the price action with stop limits for my, like, especially if my like way out of the money calls start to print. I think like right now, if like you have like 300 Cs for that week and we hit 225 or cross 225, like we hit through 230, those are going to be up like a couple thousand%, you know. And so yeah, I'll be following with, you know, stop losses to protect the downside as described in my exit DD, which you guys have been reading all along. Any sneak peek at some of the new DD the quants are working on, or what topics they're looking into? I mean, it'll be in the weekly DD with some of it. I figure I have a few weeks to get this information out, so I have 3 weeks. So I'll try to get as much out as I feasibly can before the run in November. It's a bit of a time crunch, and I'm also, you know, actively moving during that time period, so I'll do as much as I can, you know, but a lot of the information is going to be on the stream, unfortunately, because, you know, that's where I spend the majority of my time. But, you know, you guys are always welcome to, if there's something in the stream that you find really valuable, feel free to clip it and share it, or you can timestamp in the comments so people can, you know, find parts of the video that you found helpful. I think that's, I mean, I don't want to ask anything of you guys, but if you guys can, that's a huge help to me in getting information, even because sometimes I'll cover things that I don't really think are that important, but they may be really important for you guys to learn. And so I don't really recognize those as things that I should be clipping or, you know, sharing with everybody. So I think like if you guys can, that's a huge help, because it gives, you know, maybe stuff I overlook more of a spotlight. Do you think all the stuff expected in December that will just continue trending upwards from November and not dip again? It's possible. Do you have a music playlist for Boas? Does it include the Island Boys? Those glasses need to make it into the rotation. I'll think about it. It's just been all Boas, pretty much. I talked about Cat and me a little bit, Greg. Can you say more about when you know to adjust your stop limits as you follow the price action upwards? I get the concept, but I don't have a clear sense of when to adjust. I mean, so when a stock runs, you'll see periods of consolidation, right? And you know, I'll probably set a limit here. And then, you know, if it drops, I'll sell, right? Like a stop limit. But if the consolidation breaks to the upside, then I can just move, like, and then like the price moves up and starts consolidating here, then I can move my stop limit up here, right, and capture a higher price. But with those like super far out of the money ones, I really want to sell those here before it consolidates, when IV is at its highest. But the in the money ones, yeah, I'll be following with stop losses. So I'll probably sell like, you know, 60% of them on this first spike, and then I'll hold 40 to see if it spikes even harder. Like if this number is below where I expect the run to end. Now remember, like for November, 225 presents a very solid wall. So if it breaks 225 hard, I'll be looking to get out of some of those out of the money calls sooner because they carry a lot of risk. And if the price declines, they'll lose a lot of value very quickly. But, I have lower strikes to capture that increase in value. And then I have the higher out of the money strikes to capture that increase in implied volatility. Do you, with people with low capital, do you think playing the November run is still the way, or better to wait for December, early January, and then get a month out? I still think that's the way. I mean, if I had very little money, I would be all in on November, right? I mean, if I could afford to do that and like one February call, I would do that. But otherwise, yeah, I'd just be all in on November and then out if nothing occurred as quickly as possible in order to cut my losses. Uh, sorry, was that a Ko-Fi? I kind of barely heard it. After boofing it, thanks for putting in so much effort on the streams and DDs, especially on the weekends. It should be your personal time. Happy Halloween. Happy Halloween to you too, Maximus Dilymus Meridius, aka Boofus Wainwright. Check your DMs after the stream. Long message. For sure, man. Thank you so much. I appreciate that donation, dude. What date should I exercise my Feb options to cause max pressure on the hedge funds? I mean, it depends on the price, right? Like, if your Feb options are, like 350 or 370, let's say the max, and GameStop by the end of January has reached, $700 or $800. You don't have to do shit, right? You can just fucking hold those all the way into expiry and exercise them, just auto exercise them at expiration, right? Make sure you have the capital, but like if we're squeezing, right, if like MOAS really kicks off and we're hitting like 10,000 or 30,000, whenever you exercise them, it doesn't matter, right? Because it's just gonna, either way, it's gonna apply 100 shares of pressure to the upward price action because your broker is gonna have to go find those shares. He took a quick look at V and Lucid. So I'm not super interested in Lucid. Wall Street Bets wants to pump and dump it. I still have some calls that I bought that I guess are staying in the money for now. When I got out of my $30 CCs, those are doing good. But I mean, I was in much lower, right? So I don't know. I don't know how much more this is gonna run. It's got upside potential. Like, I mean, it could hit $60, $70, maybe even more. But why it's running, I really don't know. Options interest is high, but a lot of people have been on Lucid for a long time, so this is a lot of that sentiment is them just cashing out. Visa may have hit a bottom, but I don't know. It's got some resistance right here around 210. You'd have to see it bounce. I don't think it's going to continue to fall off a cliff. Like, but it might. There's definitely some downside room as well, right? Down to like below 200. The problem with like a big sell off like this is you just don't know where they're going to end. But right now, yeah, it does look like it might be coming back up a little bit from that drop down to like 210. Have you thought about posting DD to Wall Street Bets? Yeah, I have. I think I'm banned. I have to check. It may have been a temp ban. If I can, I will, of course. As many people that can know about it, the better. That's how self-fulfilling prophecies work. If everyone's operating on the same information, then it is more likely. Do you always manually move up your stop limits or set auto moving? Depends on the brokerage. Some brokerages you have to manually move them. But I'll usually manually move them regardless. I prefer to set my own limits for volatility. Sometimes stocks get more volatile as they climb, and so I want a wider range. And an auto trailing is just like having a stop loss, right? Like you're just gonna take the assignment. I use them during the stream a lot, like the auto trailing, because I can't do everything at once, and I want to make sure that I don't lose profits. But when I'm trading on my own, I usually do it manually. And the difference is probably 2-3% over a year or something, but it can matter. What's your opinion of these? Trailing stop limit, follow, or run up? So the problem with trailing stops is they lock, right? So like, if the price goes up, your trailing stop moves up, right? But then it may have like some volatility, and you'll get filled, and it'll bounce back up. And the reason I like stop losses better is because you can let the volatility play out and the consolidation, and then set your stop, right? Because usually after a spike, you'll see a harder downside than you will for the rest of the consolidation period. And that volatility on a trailing stop will absolutely get you assigned. So you have a better chance of timing the peak, but you also have a good chance of losing your shares and having the stock continue to the upside. Did V get wrecked on earnings? I think they got investigated by the DOJ. You mentioned to all-in approach for November, maybe one Feb call. Is a 90% capital allocation to February calls and 10% to November calls too risk adverse? I mean, that's probably like a healthy amount of risk aversion, actually, to old guy. I mean, I'm of the capital that I'm going to deploy immediately in November, 20% of it is going towards weeklies. The other 80% is going for further out dates between December, January, and February. So a little more risk adverse than me, but did you already cover cat? I did, yeah. I it's still the movement on cat is going to be based on the success of the infrastructure bill. So I just tried to give myself enough time on the calls that I have left. I still have November 200s. I still have December 215s, 210s, I believe. I think I have 210s, 215s. And hopefully that'll give me enough time to see the price improvement that I'm looking for on the stock. It's kind of it was always a longer swing play, and it just keeps getting pushed out. But fortunately, it's been volatile enough that there were profits to be taken along the way. That doesn't always happen. So lucky on that one, I would say, more than anything. What's up, man? Option DD Catalyst. We'll see. I don't know. It might be. It might not be. I don't want it to be, right? I'm not here to like collude people to buy options at a specific strike or date, right? I'm just saying that like this presents an opportunity for retail to leverage their positions and puts, the people on the other side of the trade in a very bad position as well. Stop losses killed me on Lucid Thursday. I learned a lot. Yep. Do you set your stop limit based off percentage of the current options price? Yeah. usually. Or how much of like a volatility dip I see, and then I'll set my stop limit below that. You can use the option chart for the actual contract instead of using the chart for the stock to set your stop limits on options if you want to. That's a way to do it. Like usually if you there'll be a chart for like an individual, well, I don't have any options open right now, but you can look at the chart for an individual contract. Do you think the infrastructure bill will just pull everything up? Yeah, rising tide, all ships, that kind of thing. Am I asking this to know if, but it'll pull some up more than others, right? Like that's usually how that kind of thing works. Short hedge fund will stall our movement up once a week. Once we break 1,000, if we'll face what we're facing now, if the price goes between 175 and 184, we'll stall our movement up once we break 1,000. I don't know how they can. I mean, likely around 1,000 they would get margin called. You know, which is going to expose all their positions, and then they're going to have to cover, and then probably that massive amount of hidden shorts from their long-term position. What are tight percentage and loose percentage for stops on options that you use? Usually a tight trail, I'll do like 5%, 5 to 10. Looser trail, depending, like this depends on volatility, my confidence in the play. Something I like have not realized expected price movement on, I might have like 20 to 30%. If they're weeklies, it's 100%. I like, if I don't see the price action I expect, I will lose the premium. Because, you know, generally when I buy weeklies or, you know, less than 5 DTE options, I expect to lose the premium. If they move in my favor, awesome. But, you know, if they move against me, it's likely I'm going to lose 80% anyway. And then if they're still in a zone where I have confidence in their upward movement, I'll just hold them. Otherwise, you know, I'll just get out with what like little is left in the contract at that point. Why do you consider a low amount of capital in order to just play the November run? I mean, they're weeklies, right? So you can buy them for fucking nothing if the price hasn't run. They're not going to be expensive. If the price hasn't run by like November 23rd, like that morning, those options aren't going to like 200s aren't going to be very expensive, right? If we're sitting at, you know, like 180 or something. Like 200s, 210s, 220s, those are going to be cheap as fuck. Like you probably pick up like 10 contracts for like $300 or $400. All this stock talk, and I'm here for cooking tips. Not sure if you talked about this in the past, but if the short hedge funds can use a box-in approach and put 50 million to minimize 800K in volume, why don't they do that more often on all important dates? See, that's short hedge funds covering FTDs, right? Which is different than market makers and APs covering gamma exposure. Not the same entities, right? And they may be related in some ways, but totally different price action. They knew exactly how many FTDs they needed to cover. They saw an opportunity and they took it. I think that's why we saw the price get boxed in like that. You can't do that kind of shit if there's volume and volatility. Your fucking $50 million sell order would just get blown out and the price would run while you covered your FTDs. there was a window where that worked. That's not likely to continue to work, and it's very, very risky, right? This is the only Halloween party I was invited to, and I feel like I'm sitting awkwardly in a corner, but I'm learning a lot. Hi, everyone. Happy Halloween. Hey, Foxy Stacks. What's up? Cool. I'm glad you got it. What else? Give me more questions. I know you got them. Don't be shy. Reach out. Say something. No? All right. Well, I tried. Can we stream spooky movies on your Discord server? No. Do you know the Muffin Man? The one who lives on Drury Lane? I have a question. Okay, Johnny. Just ask it. Sorry, Trash Dan. What's your Halloween drink of choice? Espresso and water. Those are like always my drinks of choice. Occasionally unsweetened iced tea. Any thoughts on them not rolling this time? I mean, dope. That just puts more pressure on the January run up, right? If they fail to roll, they're just as fucked. They failed to roll last January, right? It doesn't change the like price expectations, right? Hold on. And if they fail to roll this window, right? We go up here. And then we drop off, so up. And then we'll just drop off into this. And then go up here, right? Fall, up, fall, up, fall, big up. So, I mean, yeah, like the highs may not be as momentous, but the overall pressure remains the same. And they also create more days of upwards volatility if they fail to roll, which, I mean, I don't know if they realize. Or it could be the ones, failing to roll have nothing to do with the gamma exposure, right? Like there's a good possibility that they're all acting together through one entity to manage this position. But that may not be entirely true. Would you participate in a studio recording of We Are the World alongside all the major players of the GME saga, including DFE, Ken Griffin, Ryan Cohen, Adabit, Dave Lauer, Matt Kors, Gabe Plotkin, Rick of Spades, Andrew Momeney, and Vlad Tenev? I'd rather not. I'll be okay, thanks. I mean, I'll hang out with DFE, but I don't want to be seen anywhere near fucking half the people on that list. Will we ever get to see your Ryu costume? It's an emoji, so you can see it every day. Does watch sale rule affect your options trading in any way, or do you just ignore it? I very rarely sell and buy back in at the same strikes, so you don't really get hit with too many wash sales. But they're fucking irrelevant. It's just you just can't claim the losses on your taxes. Oh no. Like, I'm usually not gonna like sell a 180 and then buy another 180, right? Or, for example, for the same, as long as the contract's different, then you don't get a wash sale. So February options area hedge for if the price and IV don't retract after November, but if the price and IV drop in November, there may be some more opportunities to buy later options. Yes. That's why I plan to keep adding to my February position as time goes on. So I'll add lower strikes as they get cheaper. and more volume to my February position as we move through the cycle. I'm supposed to start my gym regimen tomorrow, but I woke up today feeling like beef jerky. Share your advice, Pickle Man. Hydrate. Drink a lot of water. And then go to the gym when you feel better. We don't have any giants like Fidelity in Canada. Yeah, assets under management and available capital matter, right? If they have to like post additional funds to protect their margin. You still have some pretty big entities in Canada, right? I'd imagine you have like, and they'll be less likely to fail, right? Because they're less involved in the U.S. markets. Is it immoral to ask my retired parents' financial planner to YOLO a few thousand into November weeklies? Probably. Have you exited all of your SPY long-term puts? Do you feel like a market crash or correction is less likely in the next 6 months? I only am holding, currently I'm only holding SPXS and SQQQ for like long-term downside. Um, but I can get into SPY puts as needed. Due to not having SPY puts, I do have some like VIX calls. And I'm still like short TLT and oh yeah, I still have puts on TLT. So that's another good like downside hedge. Did I get booted off the stream? I hope not. How do you know the IV of an options contract? It's listed. On generally any brokerage, the IV will be listed right here. Implied volatility. It's like this column on WeBull. It's listed on Fidelity options, and I think anybody that has options will have implied volatility listed as one of the values to the contract. Is it better to buy further out call options on a major dip in price earlier, but pay more for theta? Or is it better to take a possibly higher? It depends on the dip. The old guy. And you have to. It's all relative. So, if you get a big enough dip, then it might be worth it to pay for the extra theta. Should I get crab meat or blackened chicken on my 3-cheese tortellini? Blackened chicken. Crab meat's gonna be sweet. It's not gonna be. It's got that. I don't like crab meat on tortellini. That sounds gross. Lobster would be good. We only have big banks. I'm using Wealthsimple, and they offer no shorting, margin options, or anything, purely cash. They should be safe. They should be stable. Big investment banks in other countries generally aren't, or big banks aren't allowed to speculate in other countries. They used to not be allowed to speculate here. Clinton got rid of that in all his wisdom. And ever since then, the market's been volatile. Yeah, I usually do. Like every month I'll move my SQQQ out and generally try to lower the strike a bit closer to whatever the price action is. It's just a hedge for me though against, my money in the market and my capital on hand in case inflation keeps going higher. But the last correction printed my entire long-term like short position, so I just sold out of it, right? Because it looked like the market was coming back and it was stabilizing and like near the peak of that correction. So I just got out of it and then got back in once it started to regain its like long-term trend. Don't forget though, SLD coming up in about 20 days also. So that could have that could really be nice for that week in November. If GameStop gets dragged down Monday by like negative market action. Can you please take a shot on stream before you log off for MOAS? I'll think about it. Probably not. I'm sure we'll ask the same options questions next Sunday. That's fine. I'll answer them. Happy Halloween, Aggro Crag. If you were in the WWE, what would your wrestler name be? I don't know. You encourage us to clip and share, but I don't think you can clip live. I think once it's uploaded, you can make clips. If not, you can just record that section of the video and share there. It's not something I can enable. That has to do with YouTube. If they don't allow it, then it can't be done through YouTube. But it can be done other ways. But yeah, I think a video has to be uploaded for you to clip it. So like after the stream, when it's like a VOD, I think you can clip it then. But clipping the live stream, currently only I can do. Although at 10,000 subscribers, it was supposed to allow you guys to clip it also. It just hasn't done it yet. What are your thoughts? Hold on, where was I? Any thoughts on this bullish movement on the SPY and the impact the FOMC meeting this week could have? We'll see. It could be good. It could be bad. I don't know what they're going to say. January 950s look nice and cheap. Useful for possible IV play for November. Yeah, absolutely. I mean, they're not bad for IV. You may find lower IV at a nearer date, though. Can you call Matt Kors when we MOAS and AMC stays flat? How is the 100 strike more volatile than a 180 strike? Because it's... What? Because it's further away from the market price? Its volatility won't change as much as the price goes up, though, as ones that are out of the money. The volatility on these will go up faster than the volatility on these. Those are also weeklies. If you look at... So the IV is like already in these. But the IV can go up on these. I, for one, have a pretty concrete plan for this month. Awesome. What do you think they can push these dates back further? Why do you think they can't push these dates back further to 2023? Is it because they're running out of funds? No. It's just gamma exposure. There's no time to push it back. There's no moving the exposure dates. Yeah, they can pack FTDs and try to roll them out like an extra day or mark them as long to try to, get a tiny little like extra window. But for the most part, everything is going to occur as it needs to. I mean, like, just like they couldn't move the 13th or the 21st or the 26th, right? Just like they couldn't move 824 or 525. Yeah, they can't just move these around. It creates a day at which there's forced buying, right? And it has to occur. So yeah, I mean, sure, anything's possible, and maybe there's some unfound fuckery which we're not aware of, right? But you can't let that influence your decision making in the markets, because you have to have confidence in your plays first and foremost, and you can't analyze unpredictable events. Do you think this will happen if the prevailing sentiment is options and leverage are bad? As in, do you think that buy plus hold alone won't tip the scales and we require leverage? I think we require leverage to maximize exposure for the buy and holds to present a significant threat to the short hedge funds. Trash Dan. So I think buy and hold alone does not create enough exposure. So I think leverage is necessary to force them into the position they don't want to be in. And it's necessary to drive, which is essentially driving the price up and increasing volatility, right? And yeah, I think like we can own the float, but they can kick the can. And I think this presents not only a window in which their can kicking ability is limited, but also a window in which they're most exposed to upwards price action from that leverage. So I think I think if people want MOAS, like if you want a short squeeze, then you need to squeeze. And buying one call a week for a year doesn't really squeeze them. Or buying one share a week for a year doesn't really squeeze them. Haircut requirements, meaning Tesla will go down because it's rated BBB. Oh, it could. Yeah, I don't know about Tesla's bond exposure. Like, I don't know how many, like, corporate bonds are written on Tesla. Probably a bunch. No problem, Trash Dan. All right, guys. Well, a happy Halloween to all of you. I hope I've been able to help out with some of your options questions and a little bit on better understanding these dates and the importance I think they represent. So it's also necessary that both happen. Diamond hand buying and holding, and also increased leverage from those who can do options, especially exercising. Well, yeah, because 63,000 contracts or 630,000 contracts represents the entire float, right? So if we already own the float, we could leverage the entire float by owning one call option each. These guys have hundreds of billions, trillions together of dollars, right? And you're not going to leverage them by owning the float of a $14 billion company. But you can put a lot of fucking pressure on them if you own 100 times that, right? It just makes logical sense, right? Like it's what dips are the dips coming up? I mean, from now until November 19th, I'm pretty sure we're going to see declining price action, or at least sideways price action. Awesome. I'll write more about it tonight in the DD. You guys can check that out. You can't DRS options. Sorry. I mean, the exact thing that people want to do with DD or DRS is possible with options at 100 times the rate. And that's because by them being, they're forced to hedge those options in order to maintain their margin, right? And the forced hedging of those options fucks them because it moves against their other positions. All right. Happy Halloween. I'll see you guys all bright and early tomorrow morning. One more chance to close out the day. And thank you so much for tuning in. I appreciate you guys and all the members, new members this week. Thank you so much. All of you guys that have stayed on for these last 6 months. It's looking good. It's looking real good. And I'm excited for the next few. And I'll be glad to have you here with me. Thank you so much. You guys have a good one. And I'll see you tomorrow morning. Good night. Not an advisor. Frigulon.